Gold prices are pairing gains once again on Wednesday, having charged towards the $2,000 level once again, only to fail at the second time of asking. Of course, gold has traded above the $2,000 level last month when we did hit those new record highs, but we obviously then did see pot gold falling quite considerably in the aftermath. And since then, we've seen one other sharp decline as well, bringing it back into this $1,900 to $2,000 range. And as I say, over the last week or two, we've seen it push on towards that $2,000 region again in what has been quite a volatile period as far as the yellow metal is concerned. But also there's been heavy focus as well on the US dollar and US yields also. And what we've actually seen now over the course of the last 24 hours is just as gold was approaching that $2,000 level again, we got hit with some US data. And this was some strong US data, the ISM manufacturing PMI, which actually surpassed expectations in line with what we've really seen across Europe and the UK as well. So this happening just as gold was approaching the $2,000 level, we saw the US dollar actually get a little bit of a lift on the back of this. The US dollar, which in itself was coming off its lowest levels since April 2018. We've seen the US dollar obviously on a downtrend. It bounced back a couple of weeks ago, but we did see it hit those new lows again over the course of yesterday's session, only to rebound when that ISM number did come out. Now, the ISM number beat across a number of different areas, both overall, but employment, new orders. So it really was an encouraging piece of data heading into that crucial jobs report on Friday. But the lift that we got in the US dollar on the back of that did mean that gold did pull off those $2,000 levels to trade back in the middle part of the $1,900 to $2,000 range. Now, what's interesting with gold right now is, while you could suggest that this maybe spells trouble for gold, the fact that it's failed twice at this $2,000 level, I'm not sure we're quite there yet. And the reason is a few reasons, really. There's the fact that the global environment still remains extremely supportive. Only last week, the Fed changed its monetary policy framework, which in theory enables it to continue to offer low interest rates for a longer period of time. And other central banks are very much signaling something similar. Now, on top of that, we also have the fact that while the US dollar jumped yesterday in relation to that data, it is still on very much a downward trajectory, and that hasn't changed as a result of that move in the greenback. Moreover, you look at the US yields and US real yields as well. They didn't actually bounce off their lows after that data. So that again further feeds the view that US interest rates are going nowhere for some time to come, maybe many years. And this one piece of data, while giving a little bit of a boost to the US dollar and taking some of the heat off of gold, doesn't necessarily really change too much in the longer run. There's still considerable risk as far as the US is concerned, not least when we're facing a very uncertain election in a couple of months' time. So that is, for me, is still a bullish case as far as gold is concerned. The global macro environment, the downward trajectory in the dollar, and also the fact that US yields continue to trade near those lows. Of course, that may change, but we're in that very much $1,900 to $2,000 boundary right now, and a break of one or the other will give us a lot more insight. We've seen a lot of volatility. We may see some consolidation in the near term in that range, but a break of either of those could offer then further insight. And as we've seen, the moves lower can be much sharper than those moves higher. But for now, we may have to settle for a little bit of more consolidation until we see one of those breakouts.